Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to our community. My name is Bryce, and as always, I am joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. As always, a lot happening in markets. We're going to cover off the news of the day. Then it's the end of the first quarter.
Yes.
And so we're seeing companies start to report, but we're also seeing professional investors write letters to people that they're investing on behalf of.
Yes.
And so we're going to review some investor letters, and then the most anticipated segment in a while. I'm not sure if that's a good thing or a bad thing, but we're going to get an update on Bryce's mission.
Yeah.
His Herculean task to turn $500 into $5,000.
10 bag. That's right. Well, huge episode, so let's get stuck in.
News and markets.
We're going to kick off, as always, with trade war update.
Well, you say as always. Hopefully it won't be forevermore.
Well, who knows? 4 years of this could become a bit tiring, couldn't it?
Yeah, so trade war is continuing, although I think last week was a quieter week.
Definitely.
I think we can say that the Trump administration was focused on other parts of their agenda.
Yep, big time.
But we're not here to talk about that. So where are we at with the trade war? What's news?
Boeing's back in the headlines. They've become the latest target in the trade war. Their stock fell 2% after reports surfaced that Chinese airlines have been ordered not to accept any more deliveries from the American plane manufacturer.
Now, we had a look at Boeing because one thing in the aircraft duopoly with Boeing and Airbus is they both have massive order backlogs.
Yeah.
We had a look. Boeing on their current rate of production, Boeing's order backlog is 11 years. So I'm not sure that this move by Chinese authorities is the power move that they think it is.
Well, yeah, I guess of that 11 years worth of planes,
it's not like
how many
80%
are coming from China?
Yeah. Now it's just going to increase Airbus's demand as well.
Big time.
Yeah, I imagine you go back of the queue. Anyway, look, I think as you said, they're trying everything. We spoke on the last Equity Mates episode about the TikTok stuff. We spoke about the restraints on rare earth exports. Now we're talking about Boeing. Mm-hmm. We also saw from the US a non-tariff move restricting the sale of certain chips to China. Yeah. There already are bans on selling the most advanced chips, but now the US are going to restrict other chips. H2O, H20. Yeah. And Nvidia fell like 6 or 7% and brought the whole market down one day last week. But yeah, it was kind of like, I guess, a lull as the rest of the world gets ready to negotiate. Trump said he's actually going to go to Japan to negotiate with Japan, but China and the US are obviously positioning. But at the same time, China extended this olive branch. They said they are open to negotiate with the US, but only if, and tell me if you think that the US can meet these conditions, the Trump administration shows respect.
No.
Reins in disparaging remarks, adopts a consistent position, and then addresses Chinese concerns around sanctions and Taiwan.
As much as that is an olive branch, it's also almost a complete piss take and a meme because they know that Trump can't do any of those things.
Yeah.
It's like, we're going to negotiate if you can essentially become a different person.
Yeah, and I think the tactic there is probably to highlight some of the challenge. Yeah.
It's like, and then let's not even get started with JD Vance as well. I mean, he struggles to do a lot of those things as well. So,
yes. So
interesting.
So I think let's move on to some news closer to home because this trade war story will obviously be ongoing. But one of the star performers of the Q1 earnings season, Zip.
Yes, we spoke a lot about Zip last year because it almost 10-bagged in 12 months, but it's back in the headlines because its stock price jumped 16% because it upgraded its full-year earnings guidance and reported quarterly revenue up 26%. This is all driven by the US business.
Yeah, now the buy now, pay later player was down, 97% or something? But it's been a pretty incredible comeback story, as you said, driven by the US. Its business in Australia is growing, but revenue is up 40% year on year in the US. So pretty incredible how Zip was able, or is slowly turning it around. May never get back to its, it reached like $12 a share or something?
14 at peak, maybe?
Yeah, okay.
Something around that.
It's now like $1.80, so it's got a way to go, but pretty incredible from Australia's very own meme stock.
Big time. Well, staying here in Australia, we're going to close out with some news around our mining companies. So Rio, they have flagged a $150 million impairment after wild weather in the Pilbara has led to their weakest start to a year in a decade.
Yeah, there were 4 storms that hit the Pilbara in January and February, hit Rio worse than its rivals. They did ship about 71 million tonnes of iron ore, but there was another 13 million tonnes that they weren't able to ship, which was down. So it means their volumes were down 14% year on year. And they're, as you said, their softest start to a year in a decade. So that's Rio's news. You wouldn't expect that to be sort of long term, but obviously a short term hit to their numbers. This from BHP is longer term. So BHP operate New South Wales' largest thermal coal mine near Muswell Brook, Mount Arthur. They've been mining coal there. Well, the mine has been operating for more than 60 years. They've brought forward plans to shut it down. It was only a few years ago they actually requested the New South Wales government they could extend the life of the mine, but now they're bringing forward the closure date. The New South Wales government has approved it. It's looking like it will close in 2030, and BHP want to turn the mine site into a pumped hydro site to store renewable energy.
Making moves.
Big changes.
Big change, yeah. Well, if you want to keep up with all of the news that's making headlines around the world, make sure you subscribe to our daily news email. We'll send you a summary of the most important headlines that we think are moving markets straight to your inbox, 6 a.m. every morning. And there is a podcast that accompanies it. Well, it is actually the headlines in audio form. It's called Headlines by Equity Mates. It'll be available in your podcast player now.
The end of the quarter brings amazing investing insight from some of the world's best investors, and we're using AI to help read the letters and understand where they're investing.
That's it. We have 10 investor letters from the most recent quarter. Now, if you've just joined the show for the first time, you'll find that we love reviewing investor letters at the end of each quarter because, as you said, Ren, they are full of insights from some of the best investors from around the world talking directly to their shareholders about what's going on in their portfolios.
Yeah. Now, a good source for this, if you want to read the letters yourself, is the subreddit Security Analysis. There's a post every quarter that tries to aggregate as many letters as possible that have been made public. For this segment, we've just taken 10 investor letters, some from guests we've had on the show before, and then others that we thought were interesting. And we're using the Google AI tool called Notebook LM. If people haven't heard us talk about it before, it is essentially a large language model where you upload your sources and then you can ask the AI to analyze the sources, draw stuff out of it, and essentially...
It's like a contained data set.
Yeah, and it will only use that information to respond to what you're asking. So I uploaded the 10 letters and... first question I asked was, please read the 10 investor letters. What was the overriding sentiment in these letters? Based on the 10 investor letters from Q1 2025, the overriding sentiment is one of heightened caution and uncertainty, primarily driven by the resurgence of geopolitical tensions and, most significantly, the announcement and initial implementation of new US trade tariffs. This has created a sense of increased market volatility and a more complex investment landscape. Any surprises there?
No surprises. No, I'd love to read. I mean, these are up to the end of March, so just as things were kicking off.
Yeah, well, a lot of them get written after the quarter ends. Yeah. So, Trump's Liberation Day was the 2nd of April. So,
yes.
Yeah.
But no surprises.
But I think then you think about what's the utility of investment letters. And in my view, the best thing about them is they surface a whole bunch of companies that you may not be familiar with, or they help you think about companies in different ways and give you different perspectives. The value really comes for people who are trying to pick stocks.
Yeah, definitely.
And so naturally, the next question then becomes, what were the most mentioned stocks in these 10 letters? Please provide it in a list format and note how many times each stock was mentioned.
Nice.
So this is where I think the AI tool really becomes useful in aggregating large data sets.
Yeah.
And so there were 4 stocks that were mentioned 3 times or more. So S&P Global, the data and index provider, was mentioned 3 times. O'Reilly Automotive was mentioned 3 times. Berkshire Hathaway was mentioned 3 times.
Nice surprises.
The perennial flight to safety, run to Buffett. But the company that was mentioned the most, United Rentals, ticker over in New York, URI.
Well, I mean, this is case in point. I've never heard of United Rentals.
Yeah. You actually, you know what? You actually have heard of United Rentals.
We spoke about them on the show.
Yeah.
Do we do that much content?
And to be honest, I didn't clock it at first. But given that United Rentals was mentioned the most, I thought, let's dive in.
Okay.
It didn't flag with me to begin with either. But then when I started doing some due diligence, I realized we had spoken about it.
Okay.
So
nice.
let's see.
Shit.
So, and you actually told me you had it in your portfolio.
No, I don't.
No.
I was going to say, wow.
So United Rentals is the largest equipment rental business in the world, mainly focused on construction and industrial equipment. It was started in 1997 by Brad Jacobs.
Ding, ding, ding.
Does that ring a bell?
Yes.
Yeah. So for people unfamiliar.
Yes. Brad Jacobs is the ultimate roll-up king.
Yes.
We spoke about him in the last update, I think, with QXO. Was it?
No, it was just a separate segment.
Separate segment, yeah. But he's most recently gone out and raised a bunch of cash to do another roll-up business, but has been, I guess, phenomenal at raising money, rolling up businesses, listing them, and then rinse and repeat.
Yeah.
So I'm assuming that's what he's done here with equipment rentals.
So you're right. We spoke about Brad Jacobs before. We'll include a link in the show notes. We clipped it specifically for YouTube as a segment. I think we called him the best founder that no one's heard of. He's done this roll-up play like 3 or 4 times now, different industries, but raised some money and then started acquiring businesses and built multi-billion-dollar businesses off the back of it. United Rentals is one of them. Today they have a 15% market share in the US. They do about $15 billion in revenue each year.
So we've got a company that's led by a notoriously successful businessman, but did you go any further on whether or not it's actually a good investment?
Yeah, so I wanted to have a look. And like the share price story is pretty incredible, up 3,500% since it listed, up 450% in the past 5 years. But it is down a third since its all-time highs in November of last year.
Nice.
So what's that? Less than 6 months, it's lost a third of its value. So I was like, oh, that's interesting. Looking at its price to earnings ratio based on last year's earnings, 15. Okay, that's interesting. Past 10 years, it's grown revenue at an average. Past 10 years, it's grown revenue at an average of 16% a year. Okay.
Yes.
Earnings per share, it's grown at an average of 20% a year. Okay. Keep in mind, though, it is a roll-up. So this is something to be careful of when companies are acquiring more and more companies. A lot of their numbers can look quite good.
Yeah, big time.
The good thing is earnings per share is growing, so it's not a story of issuing a whole bunch of shares to raise money and acquire companies. But there is a question around debt, so we'll get to that. But just looking at those numbers, I put it in a simple discounted cash flow to try and get a sense of valuation. And let's say the earnings per share growth rate halves to 10% for the next 10 years, discount rate of 10%, you still get a fair value of around $650.
What's it trading at?
Like $580.
Okay.
Yeah.
Okay. This is interesting.
Yeah.
Well, talk to me about the debt, though.
So, then the question becomes, all right, well, how's it funding all its acquisitions if it's not issuing more shares or not a heap more, because you can see earnings per share growing well, faster than revenue. So the question becomes, is it just borrowing heaps of money? And it does have a lot of debt. It has about $12 billion a year in debt, and debt is growing most years. $12 billion feels like a lot, but that gives it about an interest payment of about $700 million a year. And even after that interest payment, it's still made about $2.5 billion in profit last year.
So I can service it.
So yeah, you'd think it's got like a comfortable level of serviceability.
Nice. Well, there you go. Pretty good example of what can pop up in the investor letters.
So definitely one I'm going to add to my watch list. I haven't bought any yet, but definitely one that I think is interesting. I think if you come back to, so it's got a very small business in Australia. If you come back to Australia and you look at how successful Kerry Stokes's construction equipment rental business has been, you can see like it's a pretty powerful business if you can get it right.
Definitely.
So yeah, interesting one to add to the watch list. And I guess to tie this whole segment up, that's the power and the utility of reading these investor letters or using AI to read them for you.
Or both really. You still got to go and do the work and plug them in at least. So, and ask the right questions. We'll include a link to the Reddit or the subreddit that we spoke about as well.
And the segment on Brad Jacobs.
Nice. Well, we're going to take a quick break, and on the other side, I am going to give an update on how I'm going, trying to turn $500 into $5,000 by the end of the year. We'll be right back. Well, Ren, I gave myself the challenge at the start of the year to 10 bag. Well, actually in February to 10 bag. So it's been hard.
Yeah. So Bryce has given himself $500. He said he's going to turn it into $5,000.
I'm going to try and turn it.
Okay. Well, that's an interesting caveat you're putting there.
Yeah.
Now, as you've described previously, that requires, if you're going to do it in a linear fashion, that requires you to achieve a 23% a month growth rate.
23% return a month.
Yes.
Yeah.
I keep saying that I don't think you get this linearly, but give us us the numbers. How are you going? So February, I think you hit your 23% goal.
Yes, I hit my 23% goal in Feb. In March, I needed to have finished with $760 in the kitty.
Yeah, so just to be clear, February you got 616, which is what you needed.
Yeah, 616.
Yeah.
And I had over that.
Oh, that was the goal.
Yeah, that was the goal, yeah.
And so the goal for March
was 760. I finished with 720.
Okay.
So I was feeling good.
Okay.
I was slipping. I was feeling good. So the last update on the show was the 13th of March. So what I'll do is give an update of what has happened since that point in time.
Perfect.
So at that point in time in my portfolio, I had Supermicro and Antipa, the Gold Explorer, and we've spoken about Supermicro, both of which were going well. They were in the green, but they'd started to sort of slow down. Supermicro at its absolute highest point, I'd actually made 115% on.
Yeah, but then you wrote it all the way down.
But I wrote it all the way back down, and this is going to be a theme that you're going to start seeing play out.
Okay.
Antipa, I was up about 54% at its highest. At this point, I was up about 20%. So
you need some stop losses.
I know. And so I spoke to Luke about a company called Strata Minerals. So I rotated out of some of Antipa and went into Strata Minerals. This was also a Gold Explorer. It was pretty much flat. Towards the end of the month, everyone was really starting to ramp up. Towards the end of March, everyone was really starting to ramp up the conversation around Liberation Day.
Yeah.
And I was like, look, I really need to take a pretty concentrated position here either way, because I'd split Antipa, I'd split Supermicro, and I just needed to go all in on something because I was starting to sort of falter.
Yeah.
So I sold out of everything, and on the 31st of March, I bought a stock called SNAS, and I spoke about this on Instagram. The ticker is SNAS. It's the Global X Short NASDAQ.
Nice, the ETF.
The ETF. Yeah. So it was up to 250% or just over 200% or times 2 leverage.
Oh, it's leveraged.
Leveraged,
okay. So a leveraged short NASDAQ ETF.
Leveraged short NASDAQ ETF.
The last throes of a man was falling behind.
On the 31st of March, knowing that April 2nd was Liberation Day and that surely what Trump was going to announce was going to unsettle the market.
Okay. So we can skip over this bit. You were right, blah, blah,
yeah,
blah.
no. This is it where I'm going to take my glory. But what I didn't do was go all in. I kept a little bit on the side because I'm just like, I don't want to wipe all of my money.
Yeah. Like the worst outcome for you in this challenge is you end below $500.
Yes. Yeah. Well, someone even tweeted Bryce trying to turn 500 into 5,000, only 5,400 to go. I'm not in the negative, that's for sure.
All right.
Well, look, long story short, market started tanking 4 days later. I was feeling like a genius because it was a 2 times leveraged short NASDAQ. So I bought more on the 7th of April. Now, if you look at a chart, the 7th of April is where I was all in, and that is the peak, or I guess the trough of where the market the following day then bounced 10%.
Yeah, that was one of the NASDAQ's best days.
Best days ever, yes. Yeah. And so I had a stop loss in for not to lose my money on the position.
Okay.
And so effectively what I'd done is ripped about 40% over 3 or 4 days and then ripped right back down, but then sold out of everything when it ripped on that best day ever because it ripped sort of 10 or 12%.
Yeah, but for you fell.
For me, I fell. Yeah, so I fell 30 odd % on that day.
Okay, so that was a big roller coaster ride, and you were back to square.
Back to square one.
Not back to 500, but back to like the 700 or whatever.
Yeah, so I went all in on 720. Stop lost out, including a bit of brokerage and some losses on Strata Minerals. I'd lost all my gains, missed the top, and now I'm actually at 706. So just to close this out, since the last update, the NASDAQ is down 5%, the S&P 500 is down 4.5%, the ASX is flat, and I'm flat.
So if you had just held the NASDAQ, double short NASDAQ ETF, until today, you didn't have a stop loss on, you would actually be in a better position.
No. Well, if I'd gone all in...
Because it's fallen a bit since.
It's fallen a bit since, yeah.
It's like down from where you bought it.
It's down from where I bought it. Yeah. Just. Only 4% down.
Yeah.
So I would be in a slightly better position. The annoying thing is Antipa is up 25% in the last 5 days.
And you're out.
And I'm out. Yeah. So I would actually be in the 800s now if I'd just stayed all in with Antipa.
Oh no.
Yeah. So that's really annoying because I got in on that at about 20 cents. It's now up to 54 cents. So I could have almost doubled that. Yeah.
You would have, no, you got in at 20 cents, it's 54. You would have more than doubled.
Yeah.
You would have almost tripled.
Yeah. So I'm getting a few, this is becoming really frustrating. So now I'm all in cash. I'm all cash, which is the worst place to be when I'm trying to get 23%. So the big learnings here are timing the market is obviously a fool's game. Don't do it. It's no good. Knowing when to sell is obviously another really important component here because you can make the right call on the way in. And this is, and I've got a voice note here that I'll close out with Luke because he heard an interview that I did with Ben and sort of had some comments. But I think making these sort of macro calls, which I think when you look, you've got to get 2 things right, which is the way in and the way out. Yeah. It's like if the long-term investing we do, it's kind of just like, sure, you need to make some sort of long-term call, but the intensity of getting 50% or the right call on the way in and then knowing when to get out in the short term is just unbelievably difficult.
The irony is, though, for every position you've sold, I'm not sure about Supermicro, I don't know where it is now, but for every position you've sold, you would have been better if you hadn't sold.
I know.
Short NASDAQ, you would have been better, and Antipa, you would have been better.
Yeah.
Oh, I don't know about the
Strata Minerals, no. So it's actually tanked about 40%.
Oh, really?
So yeah.
Okay.
But that happened before I got into it.
Supermicro probably has fallen more with the market.
Well, it was, as I said, up about 115%. But you're totally right. The lesson here is the emotion that drives trying to find 23%, like forgetting that you could do that over 6 months if you just let things play out. Like in the last 5 days, Antipa has done 25%.
Yeah, the irony is that people who had never heard about Antipa before you started speaking about it, and if they just held it, are better
killing
off than
it.
you. Yeah,
are better off than me.
They'll soon, yeah.
Yeah.
So look, I think you've got quite a negative slant on this. To be fair, you still are up more than 40%.
Yes.
It's just not 1,000% that you need to be.
Yeah, well, that's the thing. By the end of April, so within the next couple of weeks, to stay on track, I need to be at $937.
Okay.
So I need to find effectively another $240 in 2 weeks to be on track, or just acknowledge that if I find something that's going to just keep ticking away,
you should just go.
I'm eventually going to get there. So guess what? Triple long NASDAQ.
$240. Just go to a Uber Eats shift.
That's not the game.
Yeah, I think you.
But I will get there.
You can't chase this.
Yeah, I know.
You can't get
that's
desperate.
yes.
You can't go like
right.
you can't go like, oh, now I got to go quadruple leverage.
No, you can't. That's the lesson from you get enthused by trying to get, making these calls around, when to try and get in, but then it can just all come crashing down so hard. So I think, trying to find something that's just going to tick away for 3 or 4 months now is where I'm at.
Okay.
Yeah. So if anyone has any ideas, let us know. But yeah.
Did you have a
tough
voice memo from Luke?
Yes. So I'll close out here. Luke obviously has a few opinions on how I've played the last month. So we'll close out today's ep by hearing what Luke has to say about my journey.
All right. Well, that'll do us for today. Enjoy Luke as we leave you. Make sure you subscribe so you don't miss an episode. Don't miss the next update from Bryce. And if you enjoy this episode, give us a rating or review. It really does help new people find the show. But that'll do us for today. Over to Luke.
Brycey, Luke here, mate. Just thought I'd drop you a quick note on the back of your episode record with Benny last week. And, that combo you had about double short NASDAQ ETF and how you sold Antipa for your 500 to 5,000 challenge. I just wanted to point out, I suppose, 2 common investor mistakes that I see that you've just made. And the first one is you're smart enough to buy, but you're not smart enough to sell. And essentially, you've bought this thing, the market's gone down, it's worked for you. But by the time you figured out it's time to sell it or you want to sell it, you're already losing money again. And I suppose it's really symptomatic across the Equity Mates community from the people that I've spoken to, and also, all sort of investors more broadly. They're good at spend a lot of time, picking the right investment, but then not enough time managing it or, thinking about valuation or thinking about profit taking. And they're really good at buying, but not very good at selling. The investments they've got that have gone up, they never want to sell because they're green. They make them feel good, and the investments that haven't gone well, they end up selling cheaply and are overly loss averse. So, look, just a word of caution on that. And I think second, obviously, the idea of trading ETFs or leveraged ETFs in the short run, I think, is pretty problematic. It's sort of like a lotto ticket type stuff where you're taking an investment with really no underlying thesis beyond it went down yesterday, so it's going to go up today, or it went down yesterday, so it's going to go down tomorrow, which is, a coin flip at best. And particularly when you're funding it with investments where you've actually got a good fundamental investment thesis, that idea that momentum is always right is problematic and will lose you more money than it makes. And I also think that, being bored or not having enough entertainment, I suppose, from your investments is a quick way to destroy your capital. If you're having fun and it's feeling sexy, you're probably going to lose money, in my view, and that's in the markets, in business, in almost everything that I've ever seen. So sexy is not normally profitable, and profitable is usually boring. So just a couple of thoughts for you, mate. I was sitting there listening to you guys chat away, wanted to interject, and didn't get a chance. So hopefully that's of use to you. Good research is out. Tomorrow, the 15th of April, new little 3-bagger in there for you, horsey. I reckon that is a nice little industrial company that no one's ever heard of, so well worth a read and might be suitable for your 500 to 5,000. Got any questions about it, just give us a buzz. All right, chat to you soon. Bye.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.